And welcome to the end of another trading week, and what better way to celebrate than with another weekly wrap-up. Today I'm joined by Chris Beauchamp, market analyst with IG Group. So Chris, while there is still some anxiety concerning China's waning economic growth, the yuan has posted its best week since March after suspected PBOC intervention. Is this going to change expectations about depreciation?
I think we will continue to see the Chinese doing their best to keep moving the yuan further lower. Of course, we do have the issue of special drawing rights and the IMF to bear in mind for later in the year, but I think for the time being, the economic necessity trumps that, and they will continue to sort of join in the global central bank moves towards moving currencies. I think the best thing that really, the fundamental data doesn't really support the yuan going up, and I think they'll use that sort of gentle momentum downwards to keep that going in the right direction and just giving it a shove as and when necessary.
And the Brazilian real has plummeted to an all-time low, and borrowing costs have tightened after S&P's slashed the country's debt to junk status, warning that the budget deficit has reached danger levels. Is it going to get worse before it gets better?
It's always you have to be careful, because it suggests that things are moving in a straight line and will continue to do so is always a dangerous one, because that's usually when you do see a bounce back. But I think even if you do get short-term bounces, the longer-term situation, I think, is the expectation of further downside in the real, really. You've seen a very weak economy, continued recession, flows of capital moving out, really. I think you're seeing a continuation of this move, really. Emerging market turmoil is here to stay, in other downgrades, while affecting those currencies, will also hit the real as people just continue to sort of move out of emerging markets and towards the security, if you like, or the certainty of developed markets.
And the Bank of England left rates unchanged earlier in the week. This is despite the current China concerns. Are they taking too much risk by waiting?
It doesn't seem that they are taking too much risk at the moment, really. Inflation is not picking up in a way that would suggest that we're seeing a very substantial turnaround, and that the BOE risks sort of dropping the ball, if you like, and letting things get out of hand. I think for the time being, they're much happier just to wait and see and allow prices to take their course. They noted the concerns to inflation, both on the upside and the downside yesterday, but broadly, the best thing for the Bank of England to do is to avoid the calls to try and tighten and continue to wait and see and expect that things will turn around in due course, but there's no need to move prematurely.
Finally, Chris, have there been any other events this week we haven't touched on that will have a long-term impact on the markets?
I think you'll continue to see a lot of focus on oil prices. That's the main driver at the moment of a lot of inflation trends, and crude inventories this week really show that the stockpiles continue to be plentiful. You get the occasional bounce in the short term on discussions or hopes of discussions that you might get some sort of cut in output, but broadly the oversupply situation will continue to put a lid on inflation. I continue to see it bearing down over the longer term.
Well, that wraps up another week. For now, make sure you have a great weekend, and remember to click back on Monday.